That said, let me welcome on board Rajesh Palviya and find out how he's planning to trade this market. Rajesh, hi, morning. What is the breach of 26K once again indicating, and what kind of downside now does it open for us?
Good morning, Aisha. Good morning, everyone. In the previous day, again, Nifty attempted to cross 26,000 level, but failed to hold that level. But on the downside, 25,900 has attracted more put writing activity. So that is clear that the market is confident to hold this put based concentration at 25,900, which is almost coincide with 20-day moving average. So for near-term trading perspective, I think 25,900, 920 zone is important to watch for on a closing basis. If we continues to trade above these level, I think trend is likely to exhibit on the bullish side, and whatever minor dips which we are getting in market will attract the buying interest at the lower level. Though 26,000 is still having a major call concentration for this weekly option expiry. So I think that is a immediate challenge for the market. If at all Nifty crosses this level in today's session at 26,000 level. So I think yes, there could be a short covering action as PCR is already at 0.85. So I think market has already corrected from the recent rally, and there is a high possibility that market may attempt to cross 26,000 level, and if it happens, then rally can extend to 26,100 due to short covering action. Bank Nifty has given very strong recovery from the recent low, and looking at the data, 59,000, 58,800 has attracted major put based concentration. So I think 59,000 needs to watch closely if we continues to hold above this level. I think here also we could see some recovery, and which could give some support to the Nifty also, as some of the private banks as well as PSU Bank has also recovered in the previous day. So I think trade setup is looking buy on dips at this juncture. 25,900 needs to keep as a stop loss for Nifty, and for Bank Nifty 58,900 needs to keep as a stop loss to buy and decline.
Okay, those are, of course, the stock biases, or rather the index trades coming in from Rajesh. But just looking at the market screen yesterday, there were names from within the PSB pack, which actually did cool off quite a fair bit. So I'm just looking at PNB, Indian Bank, etc. They were hard hit. Talking about some of the large caps, there, of course, it was the Adani group of names, Max Healthcare, BEL, M&M, Interglobe Aviation, which has been on a cooling spree for the last 2-3 trading sessions. That as well eased off. And SBI as well was hard hit by about 1.7% or so. Parag, what do you do when it comes to PSBs? And do you think dips like what we had yesterday are good buying opportunities, or at least add opportunities if nothing else?
Yes, of course. So with the disclaimer that I'm already adding, uh, my view is very clear that Indian economy is going to do well, even if tariff stays at say 25%. And while FIs are continuous sellers and shorting the markets because the trade deal is getting delayed, but Indian underlying economy is doing extremely well. Thanks to government and RBI steps, which they have taken GST cut, repo rate cut, CRR cut, and increase in the income tax slab. And I would say, like to believe that government and RBI are absolutely pro growth. And I was extremely impressed with SBI's performance. First of all, see, one big advantage PSU banks have in this cycle is that their CD ratios are much lower. So there is no constraint, they can grow. They have easy access to low cost deposits, also evident in SBI's result, where current account increased by 18% YOY. Right. So, and that is how they protected their margins also, even when repo rate was being cut. And now they have said that even if 25 if rate is cut, then they'll be able to protect the 3% margin guidance at the end of 26. And then from FY27, remember, the credit growth, nominal GDP, everything will go up and margins will also recover. So if somebody has an 18-month view, I think SBI is the best buy. SBI and followed by PSU banks like PNB, Canada, all are great buys. And yesterday's fall was mainly attributable to one thing, that there was a clarification in Parliament that FII holding will not be increased from 20 to 49%. But just to do a reality check, actually FII holding is below 20% only. So it doesn't change anything. It is just that it might have attracted passive flows if the FDI limit would have been increased, FI limit from 20 to 49%, which those flows will not come. But I think the fundamentals will take care of itself. SBI is just trading at 7.5 PE, 1.1 time book, growing at 14% with ROA of above 1.1%. I think whatever fall is there, it is a buying opportunity based on my constructive view on India's economy.
Parag, I'll come back to you on this with a follow-up. Somil, let me come to you with regard to what you think of SBI on charts.
SBI, we spoke about PSU Bank, the
Yes.
smaller PSU banks, and I think SBI falls in the same bracket. In the last couple of months, it has started the rally from around 800 levels, and the high was around 1000 levels. Now this entire rally is in a way for a retracement, and I'll be expecting this retracement to continue. I won't go short on PSU banks, not on SBI Bank. I'll be expecting this stock to take support around 40 daily moving average or a little lower, which is around 930, 900 levels. So that will be a buying opportunity around those levels. Revisit this stock at those levels, and then again start building on to these stocks for a medium to long-term investments. So buy on decline should be the strategy, but yes, there is pain in the short term.
Thanks, Somil. Great to have you on the show. Good. Glad that we could, speak today, as always. Just looking at some of the other newsmakers as well in trade, and of course, Interglobe Aviation, the kind of flack that they're receiving post, all the delays that they are having, all because of, the pilot crunch and the staff crunch that they are facing. So that, of course, is one newsy stock, so to speak. Other than that, of course, many other names. JSW Steel, of course, is something that's on our radar. The JFE deal, EV is around 53,100 odd crore rupees, which is in line with estimates. The company's net debt now reduces by about 46%. So that, of course, is going to be a big positive for this particular stock. Biocon, the board is going to be meeting on December 6th. That's day after. They're going to be mulling the investment in Biocon Biologics as well as fundraise as well. So that's the other stock which is also in focus. And then Petronet LNG, they've signed an agreement worth about almost 5,000 odd crore rupees with ONGC. Look out for what that stock as well is going to be doing. And Vedanta, which has got the NCLT nod now to acquire In-Cab Industries for 545 crore rupees under IBC. That's the other stock, which of course we're keeping on our radar. Defense, that entire pack also is going to be sensitive today. Remember, Russian President Vladimir Putin's India visit begins today, and defense deals are what the anticipation is. But I wanted to understand, how is it that you're looking at defense right now? I mean, discovered play, stocks have already run up quite a fair bit. And when, the first signs of a market correction, defense, railways, these are typical sectors which tend to get very volatile and cool off first.
Yeah, so basically, see, I'll tell you, we have been underweight in this when this India-Pakistan conflict happened and all these defense stocks were at euphoric highs. That time we sold out,
Parag,
and we have not bought it.
Parag, apologies. We've got you in a very bad audio line. We'll let you go on that note and we'll chat again soon. But Rajesh, BEL, BDL, some of the shipyard names, anything that's looking good for a trade?
So I think from technical point of view, I think BEL is very well placed across all time frame, and I think looking at the overall structure for BEL, stock is consolidating since last couple of weeks in a tight range. On the downside, 390.95 is the good support area for near term to short term perspective, and on the higher side, 420.25 are the resistance zone. But structure is looking bullish, and I think after brief consolidation, we could see a breakout on higher level, and once the stock crosses above 425, the higher trajectory around 460, 470, we could see on a positional perspective. So I think BL one can focus on. Rest other, defense stocks are still in consolidation mode. BDL, HL, GRSC, all these stocks are having similar kind of structure, and still consolidation is happening in this counter. But if I go with the technical setup, I think BL would be my first choice to buy from this pack.
Okay. Rajesh, within the Nifty 50 pack, Asian Paints was one which really stood out a couple of days back, that move. And if you look at the stock chart from maybe from the 1st of October to now, it's been one of the best performers on the Nifty index. Your view on an Asian Paints now that we're now seeing maybe 3,000 on this stock, or closer to 3,000 on this stock?
So definitely, Asian Paint managed to view breakout of almost 8 to 9 month consolidation range. Stock was in range bound activity for almost for 8 to 9 month, and a very strong bullish candle we have already seen in the previous month for Asian Paint on the monthly chart. Looking at the breakout and the formation which is taking place on the weekly as well as on the monthly chart, which is giving clear sign that now stock has bottomed out, and now we could see further more upward trajectory in this stock going forward. So it's a wealth creator stock, and I think after a long consolidation, stock has already given a breakout. So buying interest has been returned back in this counter, and the kind of return which we have seen in last couple of months, I think trader as well as investor interest is there in this counter. Stock is consolidating after a rally, so we believe till stock is trading about 2,900, I think trend is likely to exhibit on the bullish side, and possible rally towards 3,050, 3,100 we could see in the near term to short term perspective.
Well, ITC, Godfrey, VST Industries, the tobacco names also in focus today. The Lok Sabha, remember, has passed the Central Excise Amendment Bill to now repurpose levies on tobacco products ahead of the scheduled phase out of the GST compensation cess, which was levied on then. Rajesh, do you sense any aberration on an ITC or a Godfrey?
Still, the trend is looking weak for Godfrey Phillips and VST, ITC. All these stocks are exhibiting the same kind of structure. Series of low top, lower bottom formation is taking place. Godfrey Phillips already slipped below to 20-day, 50-day moving average. Still, there is no recovery despite stock has already corrected for this is the fourth consecutive month where stock is making lower high low formation. So I think still. We may see further more pain in this counter. Could be on the downside, it could slide further to 2,700. That would be the next major support area for this correction. So one can review around 2,700 because it would be again oversold trajectory for this counter. So where one can review it again on the VST Industries, it's moving in lower low top lower bottom formation in the down sloping channel. So here also trend is on the weaker side. ITC is almost near to its important and critical support area of 390 400 zone, which is very important and critical for ITC on the long term perspective also. So 390 could be a level where some buying action could come back in this counter, but again one should keep very tight stop loss of 385 if you are buying in this decline, because multiple time we have seen that stock has recovered from 390 400 zone. So almost risk to reward is in favor, but we need to watch whether it's able to defend 390 or not in this correction.